happens next, and what does it really mean for society and the stock market? I want to bring in Quill Intelligence CEO Danielle DiMartino Booth, along with the Fitz-Gerald Group, Keith Fitz-Gerald. Danielle, even the ECB now saying inflation is going to spike to 3%. It's transitory. They're all taking this big gamble. What's at stake here? I mean, what's going to happen to the very people that they claim they're trying to help with this?
So, the fact of the matter is, transitory was redefined yesterday by the Atlanta Fed's Bostic. He said it's not going to be, it'll probably be more like 9 to 12 months. I think they call that a year, Charles. And that really is hitting people where it hurts the most, at the grocery store, especially at the gas pump, where we're looking at average of $3 per gallon of gas nationwide. That's the highest since 2014. But even if all of the commodity space is transitory, even if all the inflation that we're seeing in commodities is transitory, what's not is the damage that the Fed has done to the housing market that is bleeding into rental inflation in the United States. And that's the largest line item for your average American family, right. And it really is going to hurt, and it's a sticky kind of inflation. This is not transitory.
Keith, it's not just, of course, the Federal Reserve. The federal government has been spending a lot of money, and of course, just moments ago, we got breaking news that maybe now, finally, we do have a infrastructure bill. I want to take a listen to what President Biden had to say about that and get your thoughts.
This bipartisan agreement represents the largest investment in public transit in American history.
So we got $1.9 trillion for the COVID relief, another $1.2 trillion for transit. A lot of folks are saying it's also that federal spending that's driving up inflation. It may mean one thing for the stock market and something else for Main Street. Can you break it down for us?
Absolutely. There's, to Danielle's point, where is this going to hurt the most and where's it going to benefit the most? The amount of money sloshing around in the system is key. The more of it, the easier it flows to where it's going to be treated best. I think the Fed made a horrible mistake. I think inflation is far worse than it counts. And I like the fact that maybe we finally have an infrastructure bill that's actually going to promote infrastructure, which America desperately needs.
The good news, too, is that no tax hikes associated with that. Now, in the meantime, Danielle, you know what? Housing stocks are getting hit today. Lumber prices have come down. We even see now where U.S. truck rates are edging down a little bit. A lot of things seem to have hit some sort of brick wall. I mean, have we gotten to the point where people are just going to stop buying these kind of goods and services? They can't afford them anymore?
Oh, look, Charles, the buyers' conditions for homes is at a record low. And that contrasts sharply, obviously, with selling conditions. But that's a no-brainer. But no, you are right. We have hit price pain thresholds, whether you're talking about the industrials complex or you're talking about U.S. households. You're seeing home sales fall in California. You're seeing all 4 major regions of the country's sales have rolled over. The last few housing reports we've gotten have been disappointing. And a lot of it owes to the fact that since the pandemic hit, because of the Fed's easy money policy, we have seen a shift towards building much more expensive homes, and we've seen a shift towards existing home sales prices being up, by the way, 24% year over year. Something has to give. It is time for the Federal Reserve to step back from the mortgage-backed securities market that is artificially repressing mortgage rates and fueling speculation in housing, hurting the public that they are duty-bound to serve. That's on the Fed's front page, to serve the public interest. They're not doing that, Charles.
Keith, when the Fed does eventually take away accommodation, it always, ostensibly they're doing it because the economy is doing so well it doesn't need training wheels. In this case, I don't know what you would call these. These ain't training wheels, right? Why does it have to go down? I mean, why would the market not be able to stabilize itself once the Fed moved away?
Well, this is the interesting part. You've got to draw a distinction, Charles. It will. This is the distinction, though. There's a difference between the rally in the market and the economy and highly leveraged traders who are going to take the rest of us on a white-knuckle ride that nobody signed up for. That's where I talk about how much money's in the system, because those are the folks that are going to dump things as fast as they can to get out of the way of a margin call. The rest of us can actually, as individual investors, use that to our advantage, because eventually the money will come home. Hope is powerful and it's profitable.
Keith and Danielle, let me jump in because President Biden, we might have gotten the old switcheroo. We thought we were having a big deal about infrastructure, but now we're hearing from the president he won't sign the infrastructure bill without reconciliation, I guess, for some of these other things. Danielle, there's a lot of horse trading going on down there. We see where Senator Manchin might be ready to flip. Maybe the last person holding the line would be Senator Sinema. Just your thoughts on that, just the sort of horse trading that's going on in D.C. right now.
Look, Charles, we all need to, get our history books out, Google debt ceiling 2011. It was a bloody summer. Stocks fell 17%. There was a huge standoff. The Republicans know darn well that there are only 9 days that the House of Representatives is in session after the 4th of July break. There's nothing that's going to happen in those 9 days to resolve the debt ceiling. And the GOP is going to use this as a political platform to get in the way of legislation. If President Biden is going to take this route, we're not going to get the infrastructure spending that we need that will pump up long-term productivity, which this economy desperately, desperately needs.
Ironically, though, since then, there have been a few times when we've shut down the government and the stock market has gone up. Maybe because we didn't have so much wasteful spending. Danielle, Keith, thank you both very much. Appreciate it. There's so many ideas, so many.